You know, you may forget Ronnie Millsap had like 40 #1 hits. I mean, all went to #1, 40. And I got to show the picture. Y'all know I always show this, but Ronnie Millsap, you know, I worked in radio for a number of years, and I love this picture of me and Ronnie Millsap, and my daughter Abby. I mean, just look, we were in the green room with him. Look how excited he is to see me. I mean, he's just oh, I love that picture. Oh man, look, I had hair back then that actually looked good. God, I wish I had the hair back. I don't know. When was this? This was in 2013 that Ronnie Millsap was there. And boy, was he was drinking like NyQuil. His voice was all messed up. He had a cold or something, but he was very nice. But I just love this picture. I mean, he's who is this fat person that's over my shoulder? You know. All right, so hey everybody. Hey, tomorrow is the show that you don't want to miss. It's going to be the year end where we show how much money we've made or we've lost, and it'll be a time to reflect on what we did wrong, on what we're going to be doing better for the new year. It's going to be really, really exciting. I can't wait. So I got to figure out how to show the profits and losses without showing my account number. Hell, I may just show the account number tomorrow. Who cares? If someone's going to hack in, I guess they're going to hack in. But it'll be a great time. Because I do agree, you know, so many times you follow these people and they don't show you their profits and losses. They don't show you the good. They don't show you the bad. And I show everything. Y'all know me. I'm an open book. And I think that's the way most people should be. And, you know, you pay all this money for all these services. Then they're trading in paper accounts. And, well, that's not real. You know, it's not good. So you need to find something where people will be real. Just be genuine. Be yourself, right? I mean, most people, if they do a daily YouTube thing, they've got to make sure that they're, you know, dressed nice and their hair looks good. Y'all see my spam count, right? I mean, this thing is older than Methuselah and it's never been washed. And this is the one that I use out on the farm. And I take this one everywhere. I mean, I would wear this to church if Beth would let me. So, you know, the most wonderful point in your life will be when you don't give a crap what nobody thinks about you. Oh, is that the most liberating thing? To where you get to a point, and I'm not fully there, but I'm there in a lot of ways. Of, you know, I just don't care. You either like me or you don't like me. And, you know, I don't have a lot of friends. I mean, I got some great friends that have been with me since first grade and beyond. But, you know, I'm not out looking for new people to add to my life. You know, so many people are fake. You know, it's just fake. And it's good to just find somebody that's, you know, just be yourself. And don't give a rip what anyone thinks about you. You know, who cares if you're on YouTube and you got 10,000 viewers or you got 100 or who cares? Now, yesterday, one of my previous dear friends, you know, made a snide comment on the video that I posted yesterday. That's fine. No big deal. Doesn't get me down. You know, you don't like me and you know, you want to criticize me. That's fine. Of course, I pulled his comment down. You know, and if he does it again, I'll probably block him. That's all right, because I don't care. I mean, I don't care what people think about me, but at the same time, I don't want you, you know, downing me and in front of everybody. Enough people out there to do that. If you can't say something nice, don't say nothing at all, as my mama used to tell me. So in a world where a lot of people are unkind, you know, be kind, be yourself, be real. And I guess he was being real, but I mean, I got to accept it. Even though I don't care what people screenshot it, open it in Paint and scratch out the account numbers. Okay, I can do that, Ken. I mean, I'll do something. Y'all know, or maybe I won't record it and I'll show y'all before or something. I don't know what we'll do. We'll figure out something, but I kind of give you a hint on the Think or Swim account. I think we're going to be down a little bit over the year. So that's okay. We're going to be down a little bit, almost flat. And the reason, I mean, what was the reason? I did stupid stuff. I, you know, traded the stocks, the DraftKings, all the stuff that I tried to impress y'all with in January and February when I thought y'all wouldn't tune in if we did the same old thing over and over again. Because why? I cared what y'all thought, right? So I do much better when I don't give a crap what you think. I just do my own thing. So I need to take my own advice there. We need to do our own thing. You know, life's way too short. Boy, did I get a great night's sleep last night. And my blood sugars are great. Ken has told me about all of these supplements. So I'm getting supplements in the mail daily. I'm taking all, Ken's got me on all these supplements I'm taking. My blood sugar's great. I had the best sleep of my life probably last night. And things are doing well. So I'm a happy Bobby right now. I'm not sweet and sour Bobby. I'm a happy Bobby. And even when I went to the FedEx Center in Austell, I was going up there, with blood spurting out of my eyeballs. Like, they're going to give me my iPads today, and I was going up there, and basically, I really thought there's a chance that I'm going to take someone hostage until I get my iPads. I was really about to do that. So, but I was so proud of myself. I got up there, and I was sweet, Bobby. I was sweet. I was pleasant. And I go, I kind of enjoyed the drive up to Austell, over an hour from my house, to see if I could get my iPads. And you know what? I got my iPads yesterday. Now, here's what I'm upset with y'all about. For those of y'all that knew about iPads, how come you didn't tell me they were so great? Oh, man. I got like a 10.2-inch iPad. I got the thing from Walmart for $299. Now, it ain't the super sexy one. But, oh, my gosh, when you have Trading View on it, oh, man, you can move your little chart so easy. This little chart, you can move it with your little finger. It's just great. And Thinkorswim looks great on the iPad. It's just great. I'm just having a great time with it. I told Beth, I said, how come we didn't know about these? She said, well, your daughter's had one for like 5 or 6 years. And I'm like, well, I've never played with it. So, y'all gotta keep me in the loop with this technology stuff. Speaking of technology stuff, does my lighting look better? Look, I've got lights to the side. I showed y'all my lights yesterday. I got lights over here, right, that light me up. I got a pink light over here, a yellow and a blue. And then I've got this great new light up above me that's hopefully makes the light, a little better. So I'm trying to invest in our little presentation here as well, right? So we got the microphones, we got the cameras, we got the drawing tablets, we got everything. So we're really happy. So we'll see what we can do to improve. And another thing I'm doing, I'm trying to buy all my equipment before the end of the year. So if I'm doing any upgrades, anything, you got to do it so you can count it off on your taxes, right? My home office, my, anything that I need to do, I got to get it done before the end of the year. And I know a lot of y'all are like that too. And I actually need to buy a few goats for the end of the year, but where are you going to find them on the 29th or the 30th? It's hard to get a goat by the end of the year. So we got a lot of kind of stuff that we're going on. All right, but okay, what was I going to do today? Oh man, I had a cold little thing. Oh, let's look at the markets today. So we'll get into it. So if we're looking at the markets, hold on 1 second here. Oh, I know what we're going to do. We're going to answer some questions. All right, so let's look at the AD first. AD is anemic. It's 56. Nobody's trading today. Volume is anemic. 793 contracts on the last bar. Nobody's trading today. Everybody's taking the time out except for us. And I figure tomorrow people may take some, profits. I don't know. We'll see how it goes. But AD is weak. We are in that opening 15-minute range. Look, we're dead center of it. We're right below VWAP on the E-minis. We're above the cash open. We're above the hourly mid. So, it's just kind of hanging out. I wouldn't expect much for the day. Watch us have a horrendous crash. But it looks like the market's just, just chilling out. The Nasdaq is up a little bit more than the E-minis. So, everything's good. All right, so let's look at our volume profile. And we'll go to the E-minis. And if y'all don't know about the big green monsters and all that stuff, guess what? We'll be drawing them next week. The first day of next week, we'll be drawing them. So here we go. Prices of the E-minis were overbought. Overbought would mean that we would anticipate a pullback into the fair value section. Where's the fair value section? It's right in here. Right here. This is fair value. So we might anticipate a pullback where? Especially to the value area high of volume profile. Wouldn't surprise us to come back here to the 50% line. And we've always got our eye on the point of control, which is here. Now, the problem is, well, it's not a problem. I anticipate that the point of control, I anticipate the point of control to end up right here. See this, how far this is out? This will overtake this point of control. So we're about to have, as price goes here, we'll have a new point of control here. But we're never, see this gap here? It's this little gap. Wouldn't surprise us at all to see some filling in of that gap here. So that's just what my prognostication is for the next coming days. Doesn't mean it'll happen tomorrow, the next day, but this is what we're. So I'm kind of neutral to bearish for the next couple of days. So we'll see. Got no idea. And does it even matter with what we do? No, it's just fun to talk about it. So then let's look at the Nasdaq. I said let's look at the Nasdaq. Nasdaq is kind of similar, right? Look at there. We are at the top of the fair value range. So we're a fair value range. And as you'll see, the point of control has already moved from down here to up here, as we expect it will also do in the E-minis as well. It's kind of cool, right? So we anticipate we're kind of neutral to bearish for the next coming days. Wouldn't be surprised to see some of these little gaps here. All right, volume likes to test those gaps at times. All right, so that's our outlook. Now let's go and see if we're getting any clues from the skew driver. So the skew driver today is at 44. Let's see how that looked in comparison to yesterday. Skew driver 12, 13. And my dang goat still has not had her babies. What do we say, 44? And we've been taking bets on it as a family. And Devin, the inside kid, my 11-year-old, says it was going to be today. We didn't have it yet. Oh, and I played Smoky Mountain Rain because, y'all, it is raining in Georgia. Ken, I bet it's raining where you're at, too. I mean, it is, we had, rough storms last night. So a lot of rain.
Yeah, we knocked out our internet this morning.
Well, right before we went live, my internet got knocked off here. So there's a chance we may lose it, today. I need to get a generator. I don't know. We'll see if we keep everything. So look, it went down a little bit because the market's up, skews down a little bit. So that's fine. We're still neutral to bullish on the market over on the skew. Let's close that up, save it. Let's go see if we got any signals for today. Nothing. Don't buy, don't do anything. Had we done nothing other than run this program, we'd be up $10,000. Isn't that great? If we hadn't done anything. Of course, we did stuff that brings in some of the questions that we'll talk about for today as well. But first, let's go and let's look at our Analyze tab. Analyze tab. Analyze tab. And I want to look at my black swan hedges. What happens if the market goes berserk? So I change it to ES. That's where my hedges are. And I go to 4 vol steps. 4 vol. I said 4 vol steps. And I bump that up to 15. All right. Why 15? Because I need some proxy for what volatility is going to be down at a sudden 20% drop. And I think our volatility would be between 60 and 75%. So if I did this to 10%, you see volatility would be 45 to 55. I think on a 20% drop, we're going to be higher than that. And that's why I put it up to 15. So on a, let's see, hide simulations, do single symbol. So if we were to drop 20%, we're going to be up to about $95,000. Okay, I can take that. So let's go and look what our portfolio beta weighted would be. And we're going to be down $6,155. Yikes. Yikes. Okay, but I'm not blowing out. Everybody with me? I'm not blowing out my account. So I can handle that. I'm fine. So nothing to do there. Nothing to do there. I'm fine with that. So then what do we do? So the next thing we do is we go look at the forest. Don't worry about the trees first. Let's look at the forest. Let's kind of look at our Greeks. All righty. So we've got a very simple, very simple little Taduki here. right? We don't trade many underlines. And we see that our deltas for our main income driver is TQs is 261, and our overall deltas are similar at 237. So it's reduced a little bit because we have several hedges in here, which is great. Our theta is negative 41. Now, it's a little different from the first of the year where we were completely driven by theta. So this would really be a bad thing if we had negative theta, where theta was our number one driver of profits. It is no longer our number one driver of profits. Our number one driver of profits is the TQs. So we don't want this to be negative, and we don't want it to be negative positive, but you know, I mean, it is what it is, and it's because of my hedges. Now I have some options that are expiring tomorrow, so this will change. I've got 10 ES short or long puts that will expire tomorrow, so that should increase my theta tomorrow. So there's really nothing I'm worried about. And my Vega hurts you. Negative Vega hurts you on a crash or on a down move. So our Vega is very manageable at negative 24. So we're doing good. We're up $522 on the day. So the Forest is in really good shape. Forest is in good shape. Okay. So then let's look at the other account. The other account doing well, 225 on our deltas, little negative Vega, little negative theta, and up $339 on the day. Okay, so what are we going to do? Well, what we always do, we're going to put on a 111 because we love the 111 in the micros. So we'll have to sign in again, dang it. All right, so we're signed in. So we're going to trade this on the table. And we're going to go closest to 60 days. Now, when we started, Tom likes going closest to 45 days. Yeah. I always kind of I will migrate towards 60. I don't know why. Maybe it's because I'm closer to 60 than I am 45. Or am I? I'm 51. No, I'm closer to 45. Yeah. Anyway, I'm going to go 60 days. So 60 days out. All right. I'm going to do a long put vertical. And you want this little puppy to be 50 wide. All right, so that's 50 wide. And instead of paying $15.50, we bring this down to where we got to pay about $10. So let's go chunky. Trying to get down to $10. Chunky. And we normally go to $9.75 because we know we got to bump it up a quarter to get it filled. So let's go get that filled. Wanky wank. There we go. Filled. So if we pay $10, well, let's sell something for 20. Makes sense to me. So we can pay for it. So we'll go down here. Here's a 20 and a quarter. Let's sell that one. Ta-da. Now, if this is your first one, you're not going to have this nice, pretty little thing that I got here. But why do we do this hedge? Here's why we do this hedge. Watch this. This is kind of an income trade and a hedge trade. And as you see, we make money if the market goes up, but we make good money if the market goes down. Now, why would you want to make money if the market goes down on the micros, which is, you know, a variation of the S&P 500? Well, because if the market goes down, there's a good chance that the Nasdaq goes down. If the Nasdaq goes down, that means that the TQs are really going to go down. So with the TQs really going down, we've got to offset some of the losses that we're going to take in that, and we're going to be up at expiration with our $11,384 if the market goes down to 4,335. Great. So right now it's at 4,789. So that's got a long way to fall. But if it does, this is going to help us to recoup some of the losses that we'll have from our TQQQ. Any questions about that? So then you know what I do. I look at the activity tab. I bring this over to the right side. And I would encourage you, if you don't have a Tastyworks account, to at least open one so that, and don't even fund it, so at least you can find the strikes. It's easier to find the strikes to do the 111 trade in Tastyworks. Oh, and did y'all see what I added yesterday? What's this? You don't have a, where did I do this? Oh, look, open a brokerage account at Tasty Trade. Look at that. Use this link to open the Tastyworks accounts and help me get a Tesla. Isn't that cool? So you click on that account, and if you fund your account, I get like a credit or something. And then if I get like 75 credits, if 75 of y'all did that and put 2,000 in, I get like a Tesla. I don't even know what I do with it because they're so environmentally unfriendly. I'm thinking about all that slave labor that they use across the world to extract all of that stuff for the batteries out of those mines, and then they just leave the land desolate. So I'm not sure that I would feel good driving something that had such a negative impact on our environment. Who knows? I guess I sell it and get me a gas guzzling Ford pickup truck, which is probably more likely. All right. So where we go? We'll go 60 days there, old Bob, but you got to get it in the micros, pal. Old Bobby, old Bobby. So let's go to the micros. We'll go 60 days out. And we did the 4660, 4610. 4660, 4610. Yeah, I'm such an environmentally friendly person. And I really am. I hate the fact that people throw plastic into the oceans and our little sea turtles get into stuff. That just hurts my feelings. I hate that. But at the same time, I'm not willing to go to Ted's American Grill or wherever Ted Turner's bison place is and eat a bison burger and sip on a straw that's made out of a darn paper bag. I'm not willing to do that because that's what you have to do there. I hate those straws. So I come up with an idea the other day. I said, hey, Tubby, what about if you come up with a straw that was paper on the bottom, but was plastic on the top? And I sit there and I go, oh my God, I am the most genius person that has ever lived. And I was like, I got to go look for a patent. Oh, they're already out there. People have already done that. Because I thought, look, you can have the plastic on the end, but paper there, someone's already come up with it. And I'm like, if they've already come up with it, how come it's not in the restaurants? What's the problem? Also, I don't know if I told you this, but I also lay credit to inventing the DVR, you know, the digital video recorder. That's mine as well. I really believe it because I was a kid. I was 5 years old. I'll never forget because we lived in a little trailer park in Bowden, Georgia. And I still drive in that little trailer park every now and then. And I was so excited. It was Saturday morning and I was watching Tweety Bird and Sylvester on Looney Tunes. And it was so good, y'all. I was sitting there going, and Mom and Daddy was still in the bed. And I was like, oh my God, this is the most fun episode I've ever seen. And I was just dying laughing. And I wanted to share it with my mom and daddy. So here's what I did. I'm watching it and I cut off the TV because you cut off the TV. And my thinking was you cut off the TV, it's going to stop the action, right? Tweety Bird and Sylvester are no longer going to be running. They're going to stop until I cut the TV back on. So by the time I got Mama and Daddy into the living room, there was no longer Tweety Bird and Sylvester. It was that nasty Pepe Le Pew the skunk. And I'm like, what the hell is this? It's kind of weird. But I was like, I had the idea for the DVR before the DVR was cool. Let's feel there. Love that song. Oh yeah, Smoky Mountain Rain. That's a good one. Oh man, and yeah, I mean Ronnie Millsap's stuff, y'all. I mean, you seriously, you forget how many good songs dude actually had. I mean, there's tons of them. So where are we at now? 111. Well, we got about 51 of these things. 111 QQQ Empire. Where we get to? Hold on, let me find it. 47. There's the 49th, 52nd. So this will probably be the 53rd, right? 53rd. All I got to do is keep a little list on the side, but I'm too lazy and undisciplined to do it. All right, so this will be the 53rd of these things that we've done. There we go. Right click, move to group. Get. Also, I had an idea like for NASCAR as well. You know, when they change the NASCAR tires, right? They go, now they do it really quick, right? But how quicker would it be if you had one tool that you put on all 5 or 6 nuts at the same time and you just drill once? Now think about it. So you've got a cover for all of them at the same time and you put the drill on it and the drill causes all 6 of the nuts to turn at the same time. So instead of going z, 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 you go z. Yeah, I know what you're saying, Bob. It only saves 1 second or 2 seconds, but 1 or 2 seconds could be the difference between defeat and victory. So now I don't know how to, if any of y'all know how to like do a patent on that, and you and I could get together, and, make our fortune in NASCAR. Hey, baby, I'm game. Let's do it. All right, so then I got to go MES. Hey, baby, oh my God, what is that?
A tree.
A tree?
A Christmas tree.
A Christmas tree. Look at that, Joe.
There's some on the bottom.
Oh, there's some on the bottom. So
Pink one.
Oh, that is so beautiful, baby. Thank you for sharing that with Daddy.
That was for you.
Oh, it's for me. Well, thank you, Peach. Just put it on my desk. I'll keep it there always.
I used glue for, and I colored it, and I glued sparkly
I
stuff.
know you did. Bless her little heart. She's been sick, y'all, but she's feeling better today. Praise the Lord. This is our 53rd, I think. Right? 53rd. All right. So we got to do some questions. I had a similar idea for drumhead looks. Oh, good, Rod. When I researched it, someone has already beat me to it. Yeah, and that's the thing. So many people beat us to the good ideas. You know, here we are trading the sweet butt strategy, which is a combination of everybody else's and their mama's strategy, but someone else probably out here doing exactly what we're doing in some alternate world somewhere. I'm trying to think of some of the other good ideas I've had over the years. Oh, I wanted to be I wanted to sell chocolate milk in a while. That was one of my big deals, but I couldn't get a good recipe. What else did I want to do? I've always wanted to be in the restaurant business, but Beth has convinced me that you cannot run a restaurant while you're at the beach on vacation. And every time I say, Beth, let's do a restaurant, she says, Bobby, do you like going to the beach? I'm like, yeah. She said, well, you'll never do that if you get a restaurant. And I'm like, you know what? You're right. Because these restaurant people are miserable. All right, so let's answer some questions. QS Jones. We had a lot of questions today.
Bobby, if you're serious about opening a restaurant, call me. I'll tell you all you need to know.
You'll tell me not to do it, probably, right?
Oh, I'll give you 1,000 reasons not to do it.
Yeah, I can imagine. Were you ever in the restaurant business, Ken, or know someone that was?
I got 2 brothers that are in it, and when I put myself through college being a chef, so a chef, a bartender, and a waiter. So it's like I've been on every aspect of the business.
Really? Well, that's cool. You know, I went to when Beth and I first started dating, I enrolled at the Art Institute of Atlanta in the culinary arts, and so I went for, I don't know, a month or two before. It was 5 nights a week though, 4 hours a night. And it was hard to see Beth and work a full-time job at the same time and go to Atlanta 5 days a week. So I got out of that, but I wanted to be a chef on a cruise ship. That's what I wanted to do, you know. So I like food. I like the food, but I'm too lazy to do anything. Hey, baby, what are you doing with that? Put that down. Unbelievable. Well, I guess you can play with it. Go ahead. Unbelievable. All right, so we have some questions from Serge. So Serge is in here today. So Serge has a lot of questions, and I thought it'd be best just to kind of answer the questions on our session today. And y'all feel free to chime in with anything that comes to your mind as well. So do we really need all 4 hedges on? The Black Swan hedge, the VIX hedge, adding TMF, adding the 111 trade? What would you recommend to have at a minimum? Can we just do TQQ, Q, and VIX call ladder as per the option alpha plan? Yeah, you know, and these are questions that we really ask when we don't need the hedges. So what I'm saying is that's a great question. Great question. Do we need all of these hedges that we're doing? Well, you know, while I'm thinking about my answer to the question, do we need all of the hedges that we're doing? Well, you know, Ken came up with the idea that he was going to do away with one of them. And then after a while, he said, you know what, I'm going to put it back on. And so we all have these questions at times. And when you start looking at your P&L year to date, you go, well, with that, look, Bobby, if you hadn't done the VIX hedge, dude, you would be up another $1,300. If you didn't do the Black Swan hedge, dude, you would be up another $3,000. That's $4,000 you just pissed away. Okay. I get it. But look, we've made $6,640 on our TQ, and we've made $8,000 on our MES. So if you've made $14,000, is it okay to piss away, 4? And I would say, yeah, but now we just don't want to piss away for the sake of pissing away. I got it. Now, if some of y'all have read my dissertation that I did, working on my doctorate, and in that dissertation, here's what I found. I found that, the most big guys actually hedge by buying puts. That's the time tested thing that people do, is to buy puts in the market. Okay, so what I did is I tested out, okay, what if you bought puts, and then let's compare that to buying VIX calls. I mean, yeah, to buying calls in VIX, right? Which is what we do. And what I found was that overall, if you had done that, you would have made more money by buying the puts overall over a period of time. Your account would have fared better by buying puts than something like the E-minis or SPX, rather than buying the calls in VIX. However, there's a very interesting thing that I discovered in my research, and the research was this. When do you need the insurance? When do you need the insurance? The time that you actually need the insurance is when it's crashing, okay? So during those periods that had the largest drop in the market, in the SPX, during those times, you were better served by holding the 10 Delta VIX calls rather than holding the long puts on, what was it, SPY or the E-minis, whatever was in my research. So, the VIX calls, when you needed them, served better than the puts on the market. So that was an interesting finding. I also found out that over the period of time, and I apologize, it's been a while. I tried to forget my dissertation after I did it because it was so hard. Over the period of time studied, the VIX hedge was actually overall profitable during the period. So while we can expect to use 3%, oh, y'all, the lights are about to go out. We may miss y'all. It may cost you a maximum, the way that we do it with the VIX call hedge, may cost you a maximum of 3% of your net lick a year. Okay. Well, when you've got these big income drivers that we've got, that's a little bit of investment for large, for the great returns that we're getting in our income producing assets. And overall, during the period that I studied, the VIX hedge was overall profitable by itself. So it ended up not being a draw on the portfolio. Now, is that going to work in the future? Not necessarily. We know that, but it gave me enough confidence. Do y'all see the lightning out there? I'm almost going to tell you by already before I answer all these questions. I was told only, Rod said, I was told only hedge what you need to hedge. You can overhedge, but it depends on what you're planning an exit strategy. Exactly. So here's how I know, do I have enough hedges? Here's how I know, right here. It is the Analyze tab. Am I overhedged? No. How do I know I'm not overhedged? Well, because, I'm down $6,000 for high simulations. Now it says I put that, I'm down $11,000 on a 20% hedge. You've got to figure out what the Analyze tab tells you. That's why the Analyze tab is really, really important. Am I overhedged with an $11,000 loss? Oh, heck to the no. No. So I'm not overhedged. So I've got the VIX hedge, I've got the Black Swan hedge, I've got the 111 that does the grind down hedge for us. And we've got the TMF as a partial hedge to TQQ. So is that overhedged? No. How do you know? You got to go here. You got to go, what does the Analyze tab tell me? Now, if you go down to 20% of your whole portfolio and you're like going to be up $1 million, are you overhedged on a $50,000 account? Yeah, you're overhedged. Am I overhedged? No. So I hope that answers your question. I would say the most important thing I could tell you, the analyze tab will trump everything. All right, so do we have to buy TMF if we have the VIX call ladder on? Again, check out your analyze tab. I would say that, you know, I like having the TMF in there. TMF comes at a cost too, as those funds could be used for TQQQ. Right, and as I would tell anybody, what we've back tested is the optimized portfolio on Portfolio Visualizer. You can put in any percentage of TQQ with anything else, and it will spit out and tell you, hey, pal, the optimum portfolio is 100% TQQQ. That's their optimal portfolio. That's what's going to optimize your return, 100% TQQQ. So, Serge, I would say yes. If you've got the stones to do that, then do it. Do I have the stones to do that? No. And the thing is, I trade. Y'all seen me. I trade with zero fear. I have zero fear. I don't care what the market does. I wake up. It is not going to control my life. I'm not going to lose sleep. I'm still going to have fun with my children, regardless of what the market does. The market has zero effect on my mood. My trading profit and loss on the day has zero effect on my mood. I don't care. I'm okay. I'm going to be just fine. If the market movements that you experience on 100% TQQ don't bother you, go for it. Go for it. But beware, because you're going to have significant drawdowns. And we've seen upwards of 50% or over, I think 50%. I can't remember what the drawdown was. And it could be even worse than that. So if you've got the stones to do it, yes. Now, here's what I would say. If you're going to go all in on TQQQ, then I would dollar cost average into it. That's exactly. Remember yesterday we shared the 10-year millionaire plan? What I would do is start off with $1 or start off with 10,000. That's fine. Buy 10,000 of TQQ and do 500 a month and max out your Roth IRA. That's what I do. I dollar cost average. So when it goes down, now if I was doing that, I probably would do 100% TQQQ. But I'm gonna tell you something. It's something to talk about sitting through a 50% drawdown. It is another thing to actually experience that and to go through. So for those of us who can raise our hand and say, "Hey, we've blown out accounts," yeah, we've gone through that. Well, I've experienced that for certain. But until you've sat through one of those, you don't know what it feels. You know, I'd start out with $1. I put 500 a month into it, and then just let it go, baby. If you can wait for 10 years, I think you can be just fine. All right. Do you have 111 trades both in your Toss and Tastywork accounts? I see you open them every day in your Tastywork account, but it looks like you have them in Toss. So y'all saw exactly what I do today. I open one in the Tastyworks account, and then I open one in the Toss account. Yeah, I put them in both. And those are both similarly sized accounts. So, you know, if you can't do those once a week, once a day, then do them, you know, as often as you can. It's been a very, very strong trade for us. Let's see. With so many 111 trades out there, if we get a big dip, margin requirement would drastically increase. Well, that is true. How do you account for that? When you show your stress test for 20% drop, look at the buying power effect. Yeah, I agree that you can look at that buying power effect and all of a sudden it says, oh my gosh, it's $77,000 on a whatever account. So, you know, we've got the hedges in there that I believe will pick up and take care of those margin requirements. But what we do is we do this in a way that's as safe as possible. So one of the things that happens with these trades is on the 111, if you want to take the risk off as soon as you have the put debit spread paid for, then eliminate the risk. So if we buy the put debit spread as we did today for $10, and then we sell the naked component put for $20, when you get a 50% profit on the negative, on the short put, close it. Take the risk off, because what you've effectively done is you've got a free put debit spread on there. Isn't that cool? So take that risk off. So, when I look at my account, I can go here and I can go to my micros. Hey, baby, oh my gosh, my little redhead made something. Look
It's
at
a
this.
house.
It's a house. Isn't that sweet? It is just so sweet. How come y'all don't wear no clothes? What's wrong with y'all? Y'all like your daddy. Go put some clothes on.
It's for both of you.
I appreciate that, baby. That's so cute. Y'all still making Christmas stuff. So let's look at today. I've got options expiring tomorrow. Look, I got tons of options. Well, that's yes. Let me go to micros. Take some of these off. You're right, because unless you've traded with span margin, you got no idea what happens when the market tumbles. Span margin goes crazy. I agree totally with you. So, but the good thing is, I've still got time to take this stuff off. These things expire tomorrow. Watch what I could do here. Now, I'm just going to let them expire unless the market, crashes or whatever. I've got a 0.1% chance that it gets here. Look, it doesn't even have a bid. The ask is a nickel. I mean, you could take risk off there. I sold that for $20 and I can close it. I sold it for $20.25. I can close them for a nickel. So when these things start getting uber profitable like they are now, you can close these things and take that off, take, the margin requirements off for these things. So you start closing them. And then even on these other ones, let's see, let's go to one that's 22 days out. Have I made 50% on them? What the crap is this? Those look like little black swan hedges that I put in on the micros. Let's see what we got over here. I said, let's see what we got over here. Do we got anything else? Yeah, here. So this one is going for, we could close it for $2.30. Well, that ain't bad when you sold that for $20.25. So you start seeing that I got all this stuff that I can start closing that is using my available buying power and margin. So I can close these things. I've already paid for the put debit spread. At that point, who cares if the put debit spread closes at a complete loss, right? For the debit that I paid for it, because you can start closing these things. I sold it for $20.50. I can close it for $2.60. That's what I like. Ken, you can add something else, but that's what I like about the 1-1-1 trade is that it's so flexible. I can start closing these things today. What if the market starts tumbling? Well, I got plenty of room before we get down to, you telling me the market's going to make a $791 move in the E-minis today? If it starts, no. I mean, what's to do here? Why don't I close it?
Well, here's one of my takes that's different. You hadn't brought it up, but there's an element of time involved with the 1-1-1. It isn't like you put 20 of them on at once. You put them on over time.
Mm-hmm.
And I noticed that during the Thanksgiving week where the market melted down, my account I had tons of 1-1-1s and they didn't budge. I even had them in the E-mini, not just the micros. And my account held. It held. And I attributed a major portion of that to the fact that I had these 1-1-1s trades spread out over time. I had a 35 to 40 day difference from the first one and the last one at the time. So what happens is each one of those 1-1-1 spreads was at a different level of maturity. And as time progresses and time decay kicks in, you'll see that the risk graph, a T0 risk graph for each one of those, it rises up on the tail. So that's why I got the idea of their self-hedging. As time goes by, the tail, the break-even point goes lower and lower and lower. So when you do have a big crash, collectively, it's not such a catastrophic thing. And then there gets to be a point where, like you talked about, there is no sense keeping that second short put on. Just get it off. But the thing is far tougher than, say, just a naked put. It's a superior trade in every way.
Yeah, I agree totally. Good comments, Ken. And keep in mind, y'all, and I don't tell y'all this enough, I am not the world's best trader at all. Matter of fact, I would say I'm closer to being the world's worst trader. I make every mistake. Y'all have seen me. I make the dumbest decisions. I mean, hell, I don't know what I'm talking about. but I'm not as bad as I used to be. I think that's the thing, because I really was super bad. I'm just not as bad as I am. So keep that in mind. And again, let's talk about this sweet butt strategy that we're trading. Will it work over time? I'm not exactly sure. I think so. I think it's well thought out, but we're kind of experimenting here. I think it's going to be great the day that we get the 20% down move. And then we can see, that was dumb. Okay, we'll go back and we'll recollect, regroup, and try to make it better. But at this point, I think it's well thought out. I could be missing something. So, all right, let's go back to the questions. Good questions, by the way. And I see what you're saying. Let me show you this. I know exactly what he's talking about. He's saying, look on your ES here where your portfolio beta weighted. He's like, look at your price losses. What's going to happen on that 20% down move when you go, pick. Let's do my ES. When your buying power effect is $114,000, right? Because that's what it shows. Let's see, let's go down to 20%, 91,000. That's your buying power down. You're down 59,000. Your buying power effect is 91,000. You can't hold those positions. I got it because it says, hey, $50,000 count, you're at $91,000 buying effect. Now, the thing is, this also doesn't take into effect the increase that we get on our hedges that come up. So, that's negated somewhat. And two, I'll be managing things on the way down, right? Unless it just goes from here to, right there. I mean, maybe I can't, but I'm pretty confident that, I've got enough time to take risk off, to take some of those short puts off, and to do the things necessary to keep me safe. But what do I know? I have no idea. All right, good question. So let's go to what the other questions we got. All right. How do you manage 1-1-1 trades if market goes down too fast and those trades are losing every day? What's the plan if the market gaps down 7%? Those trades will be at a big loss, or do you own the BSH in this case? Well, I think we've already kind of answered that. What you do is, now initially this risk is when you've got your first couple on, right? And you don't have the fortress bill. But over time, you've got the fortress. So, if the market goes from, I can't even see the market, it's so far up here. Here's the market. What do I care if the market goes down 7% from that? Boom. My macros have picked up. Boom. My black swan hedge would have picked up. So, as far as anything other than what's going to be hurt is our TQQs are probably the things going to be hurt. And again, this is the reason we have this hedge. So this is here. So this is why this helps insulate that 5 to 7 to 10% move to the downside. Ken, anything else to add to that? Did I answer that question okay?
I think so. One of the things that one really needs to experience this, to see how it works when they're all put together. Again, none of the simulations are going to give us the picture as it happens, because we can only look at one variable at a time. We can only move time. We can only move price. We can only move volatility, but without having everything go together. And it's just that it was all experimental to me. It was all theoretical to me until Thanksgiving, when we had the drop on Tuesday night and Wednesday, Friday. I saw the things held. And that's when I decided to put the VIX hedge back in, because there's an intermediate place where I wasn't covered. So I had a little bit of drawdown. If the VIX hedge was there, I would not have had that drawdown. So that goes back to the question, do we need all these hedges on? Well, I consider the 1-1-1 to be a self-hedging. It lifts up the tail. It lifts up the down move on a short put. The VIX hedge is like intermediate. And like you said in your dissertation, it was far more effective in the place that, where it worked than anything else. And then with the black swan hedges, you got it covered. So I think you got the thing covered pretty well. I was playing around, and I thought that the 1-1-1 self-hedging aspect would replace VIX. It does not. It just augments it. So do them all. Like you said, it's 3% of your account per year.
Yeah, and if
Yeah.
you're holding TQs on a great year, I mean, that's that's a very small amount that we're paying for coverage. I mean, that's why we've tried to look at every angle, y'all. I mean, what we've tried to do. Let's think about why we've done this. Remember when I first got on here, my health was really not that good. And I had just had the toe amputated. COVID was in place, and I was trying to come up with something that Beth could do while in the event of my untimely death. Y'all remember when we started the whole YouTube channel? That's why we started this. So as we went through the year, my health got better, and things got better. I'm doing well. I've lost weight. I'm below my wedding weight at 22 years ago. I'm almost in the 200s from 464. I mean, my God. So things are looking really good for me health-wise now. So we've kind of morphed more from, hey, let's set Beth up, to let's come up with something that we can look at once a day, that you guys are following along. You got jobs, 9 to 5, most of you. You're working in a cubicle. You hate your job. You're ready to retire. And when you're in the bathroom, you want to be able to look at your account. You want to be able to, to trade during your lunch hour. So ultimately, you get out of the dead end 9 to 5. That's where most of us are at in life. That's where most of us are at. So what we did is say, well, we can't do the 0 DTE trades because you can't even go to the bathroom and pee. I mean, you can't. God is my witness. It was one of the most fun things I ever did was trading the 0 DTE on the SPX. Lots of fun. Not good for your bladder. Not good for your health because you can't get up. Y'all got to understand, when I get up from this computer, I'm done. I do not come back up here. I do not. I watch it every now and then. I'll check on the market, but I am done. We do our little hour together, and I got other counts I got to do some things in, but for the most part, I am done. I don't have to watch it. And that's what we try to do. We create something that you can trade during your lunch, you can trade during the bathroom break. That's what we've got up. And to me, I would not take out any aspect of the plan unless you are only in, like Rod. He's got a 401k that he's doing something in. What would I do in a 401k? Well, I'd probably do some combination of a stock and bond fund, depending on what you could do. The hedge fundy type account, I would do that and not have to worry about all of the options trades that we do. Most of us, we call our group trader nerds. We're trading. We love trading. So you and I are not the typical buy and holders. That's not what we do. We kind of get I don't know what all the physical aspect, we get the endorphin rush, whatever it is. Ken, you know more about than I do, but we get the rush from hitting the send button and making a trade. Problem is we have a tendency to overtrade, and overtrading, trading small and trading often will trade your account down to 0 if you're just looking for something. And that's what worries me about the tasty trade method, the trade small, trade often. They don't make money. They just don't. I tried it. You trading the earnings every day, you're going to lose money or break even 50-50, and then you'll be down after commissions. It just doesn't work. And every one of you, I would bet, have been here because you tried the tasty trade method, and the tasty trade method just didn't work. You traded small, you traded often, and your count continually went down. So it's time you go, well, we got to do something different. It's got to be a better game in town. Now, again, the problem's going to be that this game ain't going to be big enough for you. So you go and you search for the bigger game, and you look for the bigger rush, and you look for the next great thing. And at some point, got to put your foot down and say, I'm not looking for the next great thing. We've got a great strategy. Let's run the strategy. Let's see how it does. And I think you're going to find that the strategy does just fine. So if I had a 401k, I would, do some allocation of stocks. I do some allocation of bonds, probably 2 funds max. And then I would let Lucello's algorithm tell me when to buy and sell out of it and run nothing else. So you can make this as simple as you want to. You don't want to do all this. You don't have a well of a hedge and me drawing the well and the water coming out of the well. That's fine. Don't do it. Just do, 50% stocks, 50% bonds and run Lucello, or 80% stocks, 20% bonds and run Lucello. I think Lacello is the greatest discovery we've made this year. Maybe I'm wrong. All right, why not sell puts on TQQ while waiting for a deal? Absolutely, you could clearly do that. So, start figuring out what, let's say if you wanted to do 70% of your account in TQ, sell puts on an amount that would equate the 70% of your account in TQs. How many contracts of puts could you do? And then go ahead, sell 25, 30 deltas, 30, 45 days out. If it never dips, keep the premium. Absolutely. If it does, we buy TQQ way below and reduce our cost. That's great. Do that. Now, I can't do that now. Why can I not do it now? Well, because that would give me too much TQQ, right? Now, I could sell covered calls on my TQQ, and I've done that. And would anybody like to remember what happened when I did that? We lost money on the covered calls. Why? Because TQQ is just going up. So that was a losing battle. So I kind of dumped those for a while. But someone asked yesterday, yep, Rod says it. Yeah, the TT method did not work at all. Y'all, I can't find anybody that it's worked for. And it's unbelievable to me. I don't see anybody that says Tasty Works has worked for me. Now, the Tasty Trade Method, and I love those guys. They're the ones that got me into this. So yesterday I found something, and I'm glad someone asked about it. Hey, about selling covered calls. And again, I said, no idea is my own. I find it for someone else. Someone brought up this in Reddit that I thought was pretty good. They said dollar cost average into TQQ, at least 100 shares, buy when the RSI, blah, 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 needs 440, blah, blah, blah. And you can read this and talk about, now what's this? In a margin account, sell a covered call 6 to 8 weeks out, 5 to 10% out of the money when the daily RSI is greater than 75, collect your premium, get out when the RSI rating is below 50, blah, blah, blah. I started looking at that and I said, well, what does that look like? What does that look like? The daily RSI and blah, blah, blah. Let's look at it. So let's go to our chart. And I think there's some merit in this. So let's go to TQQQ. And then I added a little RSI on here. And I'm not big on RSIs and all that kind of stuff, but it's interesting. Because part of the Sweet Butts plan is that you can sell calls on your TQQ shares. Now, what's this? So here's the 70 level, right? So he said 75, but let's use 70 since it's a generally recognized level on the standard RSI. What if you had sold calls on TQQ when it got here above 70? Well, dang it, if that ain't a winning play. Everybody see that? What if you had sold calls when it got 70? Well, here, that didn't work out too good. But if you're going out 45 days, that worked out. So, maybe you could use that for a trigger to sell the covered call, or maybe it's a combination, right? It's a combination of, well, you're above 70 and you're at the top of the linear regression. I mean, whatever floats your boat. This would have been a great time to sell a covered call in your TQ shares, right? This would have been a great time. Now, if you're going by, hey, wait until it gets here, you would have missed that, but that's fine. But if you're looking for some opportunities to sell covered calls, maybe when you're at the top of the linear regression and you're above RSI, relative strength index of 70, go for it. I think that's better than just saying on any given day, I'm going to sell a covered call. I'd like to have some type of trigger, right? You're at the top of linear regression. Your RSI is at what? That's a great, look at that. I mean, it's just boom. Now, is that going to happen every time? No, because sometimes it's going to go here. We know that. But if you're looking for pot odds in your favor, I think that's a great time to do that. So I wanted to make sure that I shared that with y'all. Yeah, absolutely. You can involve options on this, but I'm going to tell you, you don't want to just blindly sell covered calls on your TQQQs because you're gonna lose money. Well, you'll make money on the selling of the call, but you see what I'm saying with TQQ? I mean, it was not a worthwhile endeavor because I was losing on the covered calls. I was still making money on the TQQs, but you're losing money on the covered calls. So if you're going to do this, do it, come up with a system. Well, a strategy is, okay, I'm going to do it when the RSI is above 70 and we're in the top whatever of the linear regression channel. All right, great time to sell it right there. So I may just do it the next time. If watch RSI is here, so if RSI gets here and by this time we are at the top of the linear regression channel, yeah. So I've got 200 and whatever shares. Yeah, I may sell one or I may sell two. So great stuff for us to think about. So those were really great questions. Liars say it does. Yeah, liars say that taste. And here's the thing. I don't want to get on here and criticize them at all. I would not be trading options today had it not been for Tasty Trade. It's just that the method of trade small, trade often does not work. Liz and Jenny do not make money. Tom does not make money trading. He's lost a fortune this year trading, but he doesn't care. And he doesn't care because he's getting $1 every time you and I click the button. He's happy. And he wants us to be engaged and he wants us to, and that's great. But there's far better strategies out there. And we all got to crawl before we walk. Crawl before we walk. So, Serge, great questions, by the way. So I hope I answered all those. What was the last comment on here? Let's make sure we got everything before we get out of here. Would this strategy screw up AIM by, doing all that? Long Shot said it's possible. Anytime you sell covered calls, your shares could get called away. If the market moves up enough, then you have to buy them at a higher price, wait for the dip. Yeah, so, it could kind of mess up AIM. Here's the great thing. You and I have something that gives us hope on the down move. We get hope in that it tells us not to panic and to get out of shares. It tells us to buy shares. So if TQQQ goes down to 150, well, we don't do anything. If we go down to 140, we're going to buy 8 shares. We go down to 130, we're going to buy 27 shares. What if this thing goes all the way to 65? We're going to buy 292 shares. God, does that not make you awesome? Now, the problem is, by going down to 65, we just lost $13,317. Well, this is a $50,000 account. That ain't too bad. That ain't bad at all, actually. What if this thing goes down to 10 or 20? We're going to buy 1,483 shares, and we've only lost $23,000. Hell, maybe I need to scrap everything else. Let's just do this. What if it goes down to 5? We've only lost $26,000. We've had a 50% drawdown. That ain't bad, y'all. And now we're going to be buying, are you with me? 6,645 shares. Rack them up, baby. Rack them up. Serge says, might also sell TQQ altogether at RSI 70 and sell puts. Well, sure. I mean, there's all kind of things. And that's the great thing, Serge. Dude, we can, there's a lot of ways to skin this cat. There's all kind of things you can do. But now this makes me feel really good, y'all. If TQQQ goes to 0 today, I've only lost $27,000. And that's without my hedge on a $50,000 account. Y'all see how great that is? That's if it goes to 0. I'm still in business. I'm still sweet Bobby. I still got lovely 5 kids and a great wife. I still got, I wouldn't have 41,000 in cash. I'd have, what's that determined in the cash? Oh, I see. It's causing, but you see what I'm saying. The loss on that would be $27,000. I could take that. I could handle that if TQQ goes to 0. God, that makes me feel even greater. Maybe we don't need to run anything but the AIM thing. That's great. There we go. Now we're back to normal. All right, great session today. Hope you have a wonderful day. Do not miss tomorrow. Tomorrow, we're really going to skin the cat. We're going to see how we did. We're going to see, I hope to pull up tomorrow. Here's what my hope is. Just give you a little preview. I want to show y'all exactly. Here's how much money I lost on DraftKings. Here's how much money I lost on all these goofy, stupid things that I did for the year in this account. That's what we want to do. I'm very excited about that. So I think we're going to have a great time tomorrow. Yep, we got a split coming on January the 12th. So that's going to be interesting. I got to figure out, I've gone through it once before. I got to figure out what I got to do to the spreadsheet. We'll figure it out. We'll figure it out. No worries, right? So y'all have a good rest of your day, and I will see y'all tomorrow.